Hello everyone, welcome to the fresh edition of Commodity Weekly Audiocast with me, your host and guide Ravindra Rao from Kotak Securities Commodity Research Desk. As always, we will understand what moved the commodity markets last week and what's in store for the current week. An eventful week with interesting developments relating to Fed hikes ended, weakening the dollar and supporting commodities. Additionally, optimism regarding more stimulus measures from China supported economically sensitive commodities. Weak economic data from US and hawkish ECB policy outcome led to sharp decline in the dollar index that slipped to 1 month low of 102. Other than the US retail sales data, which rose 0.3% month on month in May, all the other data prints disappointed. US weekly jobless claims came much higher than expectations, showing signs of cooling labor market, while industrial output, manufacturing output, and capacity utilization came in below estimates, indicating a slowdown in manufacturing sector. Meanwhile, the ECB, that is the European Central Bank, raised the interest rates by another 25 basis points during June meeting, bringing the deposit facility rate to a 22-year high of 3.5%. On the price action front, DXY has breached the 60-day moving average support of 102.66, and it is trading below that. Now that becomes a resistance. So 102.66 would act as a hurdle for the bulls. And on the lower side, the low that was registered last week, which is close to 102, would act as a support. And if that is taken out, then we might see a dollar index further falling towards 101.75 to 101.60. Coming to commodity specific, the precious metals declined during the first half of the week as investors remained wary ahead of the June FOMC meeting. It further weakened post the FOMC meeting as the Federal Reserve delivered a hawkish skip. The Fed left the target for funds rate unchanged at 5% to 5.25%, but signaled rates may go higher if the economy and inflation do not slow down more. Policymakers said that holding the target range steady allows them to assess additional information and its implications for monetary policy, but also noted they would be prepared to adjust if risks emerge that could impede the attainment of their goals. Pausing the Fed funds rate along with projections for higher terminal rates gives the Fed flexibility to hike if data comes hot, and at the same time cut the rates if data softens. At the same time, it makes dollar movement subject to incoming economic data. Although both gold and silver staged a decent recovery, it closed the week with modest declines. As a 74% probability of a rate hike in FOMC July meeting held bullion prices from moving sharply on the higher side. On the technical front, if you look at the price action, COMEX gold is still in a tight range. If you talk about the spot gold, 1984 is the cap and 1930 $1930 is the floor. It went below $1930 last week, but it did not close, and there was a good recovery seen on Thursday. So 1934 to 1930 becomes a good support, wherein the bulls are holding the support, and on the higher side, bears are not allowing the bulls to take the price higher above 1985. So if 1985 is taken out on the closing basis, then we might see a further upside. Otherwise, the consolidation might continue. In case of silver, silver also staged a very good recovery on Thursday after falling to as low as 23.20. It was a pin bar formation on chart, and after that we have seen a bullish moves in silver. But on the higher side, $24.39, 24.40, if we take slide buffer, would act as a good resistance, and if it sustains above that, we might see the inverse HNS formation rally resumption on the higher side, and it might target close to $25.30. So 24.40 would be the crucial level to focus at. And on the downside, the low that was tested last week, which is close to 23.20, would act as a good support for the bulls. On the energy front, crude oil prices closed with 2% upside, whereas on the base metal fronts, almost all base metals rallied to more than 1 month highs as investors grew hopeful of upcoming economic stimulus from China after latest economic data releases added to evidence of an economic slowdown following first quarter's post pandemic surge. PBOC unexpectedly lowered the rate on its 1 year loans or medium term lending facility by 10 basis points to 2.65% after a similar cut in 7-day reverse repo rate earlier this week. On the technical front, crude oil is still trading in a tight range on the lower side. In case of WTI and IMX crude oil, 67 is acting as a good support, whereas on the higher side, 74 is acting as a hurdle for the bulls. We have seen a good recovery from the lower levels of $67, which has now become a near-term double bottom support. And as I mentioned, on the upside, $74 would act as a resistance. So we might see this week we might see a range close to 69.5 dollar on the lower side, and the bulls might once again try to target 74 to $73 on the higher side. So any close below $67 would again take it lower to $64, or else it might trade between the said range, the broad range between $67 to $74. On the base metals front, copper has reached 200 period moving average resistance on shorter time frame charts at around 738. So that if that is taken out, we might see copper further going higher towards 743 to 748. If not, then some bit of correction is very much possible, which might take prices close to 726 odd levels, and 721, that would act as a good support. So we might see some kind of a correction if 738 holds on the higher side. Similarly, in case of zinc, there is a good bullish engulf formation on weekly chart, which has been confirmed last week above the pattern high of 217, 17.35. So any corrective dip in zinc towards 217, 215 would act as a good buying zone. On the lower side, the pattern low is close to 204.85, and that would act as a good support. Below that, the pattern might negate, or else we might see up move, which might take prices close to 230, followed by 237 on the higher side. To conclude, now with the Fed in a data dependent mode, markets will cautiously look forward to speeches by several FOMC officials for more hints on the policy outlook. Most importantly, Fed Chair Powell testimony will be in focus. US housing data and flash manufacturing PMIs will also be closely watched for hints on manufacturing and services activity in major global economies in the month of June. Well, that's all from this edition. Thank you for tuning in. If you have any suggestions, questions, or ideas for further episodes, we would love to hear from you. Feel free to reach out to us through your advisor or connect through our social media handles. All the best and trade safe.